Hello, everybody. We should be live on YouTube, noon Pacific, on February 11th with the two original gangsters in the business, Benjamin Cohen and Rob from Digital Asset News. How are you guys today?
Great. How's things?
Yeah, things are bumpy.
I'm pretty
Things are
good.
very rocky. I mean, the old expression, when it rains, it pours. It truly is raining today. There's a lot of stuff coming down. And I think we're ready to discuss a couple of topical items. I think the audience out there is probably very concerned with what's going on. But before we jump in, Ben, you mentioned something very interesting before we started. It's a week later. What do you see?
Yeah, I mean, I sort of just commenting that a week ago when we did this live stream on my channel, Bitcoin was less than 42K, and everyone was feeling good. Now it's 43K and everyone's feeling bad. So yeah, sometimes you just kind of have to take a step back and yeah, I mean, like obviously it's not Bitcoin's down today. A lot of markets are down today, but if you zoom out a little bit, you can see that Bitcoin has actually been holding up relatively well, given the circumstances, of course.
Yeah, exactly. And Rob, you see anything
Uh,
from your perspective in the last week? What's changed in your
j-
world?
well, this is exactly what we said last week. Just expect turbulence, and especially with everything that's going on with the Fed and this problem with Ukraine and Russia, United States and NATO, and it's people, the markets don't like ambiguity or things that are going up or just tossed up in the air. And this is, I mean, you can't get any more ambiguous about what could potentially happen than right now. So just write it out, and that's how it is.
Yeah, it's funny. I'm almost nearly kicking myself because I tweeted this morning. It's like, oh my God, look at this. 50-day moving average is solid support for Bitcoin. And then, boom, we breached it, but we're right back at exactly at that 50-day moving average, which is kind of interesting. It'll be interesting to see how it plays out. So we have a lot of topics to
Mhm.
discuss today, but let's talk about the two big elephants in the room before we get into our more of a fixed agenda. First of all is the Ukraine invasion. Obviously, Crimea, Ukraine, Russia. Um, I've been talking about this since October. A lot of people in 2021 thought, oh, you don't know anything about geopolitics and Russia and everything else. They're not going to go near the Ukraine. But now it looks like it's imminent. So here we are. There was also talk that Putin and Xi are very close and he wouldn't invade the Ukraine during the Olympics. But who knows? The way things are looking, it could happen next week. What do you guys think? What's your sentiment right now about this saber rattling, these war games? Are they real or are they not? And what do you think they'll do to the markets?
I thought I'll take it first. I thought honestly this was just a power move play by Putin, and he would probably ask for some things at the bargaining table, and he would let diplomacy come out. But of course, that didn't happen, and it seems like, and even today, the ambassador came back and said, "There's really everything that we're talking about here is going right through these guys, and we are not seeing any type of ability to meet in the middle." So they even said, and just as this goes to your point about China, they said that an invasion could happen at any moment, even during the Winter Olympics right now in China. So I mean, could it happen? I don't see why not. It will be a heck of a power play to move all these forces all around, and then I mean, Putin's always Ukraine, Belarus, Georgia. There's always been this, not fascination, but the way that Putin looks at these things is like, why would I give these up and have this block, have it come back to the sovereign nation of Russia and start to absorb these places? Because his big thing is it's just not financial. Because when I do my show, I'm always only talking about the financial aspect. Because of course they want to get off the U.S. dollar as a reserve currency, use cryptocurrency, strengthen their relations with China. But I think when you just take a step back and just go, well, really, in all honesty, it's a pretty good power move. If they want to shore up everything, they'll just go right around, and it'll be just a play for the future. But it all depends on how U.S. responds, especially with sanctions and what they want to do with the militarily might. I am. It could get a little crazy real fast, but who knows?
Yeah, hopefully not. Ben, what do you reckon? Like, you're a chess player. I was thinking in terms of three-dimensional chess, and I think of, Putin buddying up to Xi for the longest time, Putin making his big Bitcoin play in a huge spectacular rush, obviously maybe to get away from other payment rails. Who knows? Maybe far out
Right.
there, but maybe it's all orchestrated.
Yeah, I mean, we've seen these types of things before. I mean, every few years, other like North Korea comes into the news because they're threatening something. Obviously, this is a little bit more serious, I think. But uh, I'm sort of holding out hope that he's basically just showing force, and maybe he's just trying to get people to come to he's gonna try to get a few things to go his way, and he's not actually going to do it. I mean, a lot of it is hard to know. Like we read the news and we see what they say, and people think that it's going to happen. We could always look back in a few weeks, and this thing could blow over, and the markets might stop freaking out so much about it. So I certainly think he's putting on a show of force. We'll see what actually happens. I'm hoping that it doesn't come to pass, of course, and and by the way, when you talk about Russia invading Ukraine, I think to some degree it's like they're not invading them more because they already have. I mean, with Crimea, it's not like this is necessarily completely new, but yeah, we'll see what happens.
So you guys aren't concerned? Like a lot of people sometimes get very rattled and they say, "Oh, I'm going to sell everything, move to cash, do a kind of a meet Kevin or something." You don't think we're at that stage?
I mean,
Uh,
I do have some cash. I mean, I think it's always good to have cash on hand, especially when we're in a risk off type environment like we are right now. And we've seen the U.S. dollar currency index going up over the last few months. With that said, I think to not hold things like Bitcoin, there's also a risk associated with that. Um, what if the Fed raises rates and they still can't get inflation under control, and what if it continues moving higher? Then what? Right? Well, maybe then Bitcoin's back to being the answer again.
Exactly.
Um, so I think that it would be I think it would be silly to completely offload everything because markets can change so quickly, and investor sentiment right now in markets is extremely low, like almost as bad as it's been. I think it might even be worse than March of 2020. Don't quote me on that, but I think it's around the same as what it was back then, and we saw how quickly things turned around back then. So no, I still have things, but I do think it. I don't think this is a time to be betting the family farm on altcoins, but being a little bit more practical and conservative.
Okay, let's switch gears for a second. Let's talk about the emergency Fed meeting that was just pulled in for February 14th, which is Valentine's Day. Reminder to everybody out there, don't forget February 14th for a whole bunch of reasons now. But this obviously is to find a way to put a lid on this out of control inflation. A lot of people are talking about now, if you calculate the cost of real inflation, I think it's more like 21%, not 7.5%, maybe 22%. And that's, you just add up all the usual things that you buy. And over the last 12, 13 months, you can see that as clear as day. But they're going to have this emergency meeting. It's all factored and priced into the markets. I think they're probably going to add 50 basis points on Monday. And that's going to be their step. But like you said, Ben, even if they added 500 basis points to interest rate, it's too late. It takes a long time to corral inflation. You can't put the lid on the jar right now. It's out. So, what do you guys think about that Fed meeting? And do you think it's rattled markets considering 50 basis points is priced in? Or do you think they'll go higher?
I'll let Ben do that one.
Yeah, I mean, I think the market is pricing in a lot of interest rate hikes already.
Okay.
And just to give a brief background on that, I think part of the reason is going back to the taper tantrum in 2013 when they didn't give a heads up as to what was happening and everyone freaked out over it. Now they've been advertising it, right, for months, like what they're going to do. So I think it's safe to say that these things are priced in. And even, I mean, there's a lot of banks now saying that there's going to be like 7 or 8 interest rate hikes this year, which I don't really know about that. But I do think I mean, I think there's a good chance they will be raising interest rates sooner rather than later. And that I think the market is more or less pricing that stuff in. The market has a way of pricing things in relatively quickly. And a lot of times when we're looking at news events and thinking about how that's going to affect markets, the markets have already priced that stuff in and they're pricing in the next thing that hasn't been announced on mainstream media, but it's still, people, you can kind of assume what's going to come. So
Yep.
I still think there's a lot of uncertainty in the air. Everyone's going to be seeing what's the Fed going to do next week, what's going to happen in March as well. So I still think, like as we said last week, and Rob mentioned earlier, that look, we're still looking at pretty choppy markets for a while. But that eventually, what happens, as you asked, like what happens if they raise interest rates and inflation keeps going up? You know, like what I mean is this something that they're going to be able to curtail, you know, sooner rather than later? I know a lot of the people are calling for the interest rates to come back down at the end of 2022. But it might not. I mean, it's also, you could also argue there's some supply chain issues as well. It's not just as simple as raising interest rates is going to necessarily fix everything. So again, that kind of goes back to, you know, Bitcoin being an inflation hedge. When you think about Bitcoin being a hedge against inflation, and then back in November, we printed that really high CPI, right, about 7%. And I think the market reacted and Bitcoin went down, not because the interest rate was high or the inflation was high, but because people were anticipating, well, what's the Fed going to do about it? But then what happens if the Fed does something about it and it doesn't change inflation? Then I think it just makes the case for Bitcoin even stronger.
Yeah. Well, let's switch gears and talk about Bitcoin. So the original topic for us today was to talk about institutional FOMO, because I think we've all kind of tracked what's happened over the last 7 days, but it's been pretty staggering. We knew about the BlackRock news, I think, middle of January, but it never hit the Twitter sphere, never hit the crypto news wires or anything else. But they've been making steps for a long time. They were buying BlackRock, for example, biggest asset manager in the world, 10 or 11 trillion in assets under management. They have been gathering MicroStrategy all last year. They own about 16% of all MicroStrategy right now. You look at Coinbase. Coinbase now has over 10,000 institutional clients. 72% of Coinbase trading volume is OTC for institutions. It's not a retail game anymore, Bitcoin. And the problem is the retail investors are getting frustrated and they're leaving while the institutions are buying up as much as they possibly can. There's some other interesting stats as well. There's been a 4x increase in transactions over $1 million. Coinbase are processing $5,500 million plus transactions every single day right now, all institutional. So when people think, oh, I'm going to spend $500 on Bitcoin as a retail investor on Coinbase, it is totally a nothing burger compared to the amount of institutional activity that's happening. Then you got the KPMG news, you got Russia flipping positive on crypto, you got all the VC money. I think VC money in 2021 was about $35 billion of money went in. So if you think, if the VCs are investing that much, institutional will be doing 100x what the VCs are investing. That'd be 33 billion times 100, which is 3.3 trillion. What do you guys think of the institutional FOMO? And is 2022 the year where all the institutions are just going to come right into crypto hard? It's already happening, but what do you guys see?
I mean, here's the thing. I've been hearing about institutions coming in, and they're all coming in, and there's a wave of money coming in forever. And I know that in 2017, we didn't have the rails. We had to build the rails for them to come in, and now it's almost here. I've also been hearing about this magical ETF, spot ETF that's supposed to come in. I know, James, you think it's magically going to come in June. I just don't see it happening. That's just me. But I will say this about the institutions coming in. I mean, that's great. I mean, they're buying up OTC, and they're letting the retail just kind of slip. I find it concerning that it is that much. Coinbase it's a free society. They can do whatever they want to, but it seems like the power of the people, the group of the people, just kind of loses it out to the institutions. And it's not the game that I remember getting into, but it invariably is what it is, and it just goes to this. And the last thing I will say is about this BlackRock. Two things. I know people have been talking about this, like, hey, BlackRock's getting in and they're going to allow cryptocurrency trading and stuff like that. I read the article from CoinDesk, and it wasn't like BlackRock came out. It's not like Larry Fink came out and go, you know what, this is the best thing of all time. I want to do this. It was 3 sources that were familiar with the matter, blah, blah, blah. And this is going to happen. And I know that they have been getting into by proxy by MicroStrategy, but they've been buying MicroStrategy since 2012. And I know they've been in there. I mean, you can take a look at the SEC filing. So, I mean, yes, they're here. Yes, they're doing more. But I'm waiting for this enormous wave to come in, like I keep hearing about, and we'll see. That's my wet blanket response for the day.
Yeah, well, I think it's definitely real, because BlackRock, they're in the game from a couple of different perspectives. They've been playing with CME stuff for a long time. They're setting up their trading desk. I think they call it Aladdin platform. And they're also, what's really big, it took me by surprise, is they're offering institutional grade crypto lending. Think Celsius for institutions. against their Bitcoin. This is a game changer, and this is big, and this is all very real. This is not, oh yeah, we're thinking about doing it. They're going in whole hog. And they represent some of the richest people in the world, richest institutions. Mm-hmm. Again, $10 trillion not to be sneezed at. So, Ben, what do you think?
Yeah, I mean, there definitely are parts of what Rob said that I do agree with. There's certainly back in 2017, early 2018, there was a lot of talk, similar types of things, like a lot of money coming in early 2018, and we didn't really see that happen. But the conditions are different today. A lot has happened since then. Back then, Tesla hadn't bought $1.5 billion worth of Bitcoin, right? MicroStrategy wasn't DCAing Bitcoin every month at its all-time highs, right? I think that institutions are definitely coming in. We can see that. Furthermore, a lot of times when these institutions are accumulating, they're not always necessarily smart money, right? If you're an institution, you basically just go through the process of saying, all right, do we want this on our books or do we not want it on our books? If they want it on their books, I might just go buy it. And then their idea is to hold it for 10 years or 100 years or whatever. It's kind of like when Michael Saylor talks about it, he's not thinking about flipping it tomorrow. He doesn't really care. It's basically just buying it for the long haul. And one of the things we can see is we on chain, we know the illiquid supply is going up. There are some on-chain metrics that look a lot different in 2022 than they looked in 2018. There definitely are some differences between those. Even our famous whale number 3, continued to buy Bitcoin through, I believe, February 6th. So the entire fear below 40K, that person whoever that is that owns over 120 something thousand Bitcoin, they bought it. They bought it all up below 40K. I don't think they've bought any since then. So I do think they're slowly coming in, and eventually, whenever we get past all, there's so much fear in the markets right now, and it's not just crypto; it's every market. It's the stock market too. If you're seeing the stock market drop, there's just going to be a lot of fear in crypto. So what I think needs to happen is we need to sort of try to get people to focus on the larger picture here and say, look, we're going to get past this uncertainty. We're going to get past this fearful phase in the market. And then we'll probably start trending higher, especially with all this new money coming into the space. But in the short term, I would still, even with institutions coming in, I would still expect choppy waters for at least for the next few months.
Yep. Excellent. Well said. So let's switch gears one more time. Got a lot of stuff to go through before we open up some questions at the very end. So Fidelity, Jurrien Trimmer, awesome guy. He was on with Preston Pysh yesterday, and he talked about a lot of great stuff. But if anybody has time or an hour free, check out that video. He is a top guy as well to follow on Twitter. And by the way, links for Into the Cryptoverse and Digital Asset News below in the description as well. Make sure you subscribe to these channels if you haven't already, but I doubt that very much. I think everybody's subscribed to both of you. But Jurrien spoke a lot about Bitcoin, and he's a massive Bitcoin bull. So is Fidelity. Fidelity's been buying Bitcoin since 2014. They have a huge bag. They could be wallet number 3 for all we know. But he had this analogy of the fact that he believes Bitcoin is going to go exponential the way Apple did over the last 10 to 12 years. Have you guys thought about that? Do you see any parallels that Jurrien sees?
I see it. There was this report that came out from Wells Fargo. I don't know if you took a look at it. It was kind of innocuous, but it came out, and they really just said that, which is weird that Wells Fargo came out. It's pretty. I mean, if you're not from the United States, it's a pretty large bank here in the U.S. They've got almost, I think, $2 trillion assets under management, and they really just said, hey, crypto. If you take a look at, they didn't just say Bitcoin. They said crypto in general. If you take a look at crypto and how it has gone up on the S curve, like you guys talked about before, as far as like the internet, you can see a direct parallel between what's going on. And they compared it to, and it was pretty interesting, between electricity, 1920s, automobiles, 1930s, 40s, radio, televisions, color television, smart internet, smartphone, and of course, crypto. And you can just see the curve just go like, I mean, for the electricity took a long time, cars took a long time, but smartphones and crypto and internet for what it's worth just go just go straight up essentially. So you can see what's going on. And they even said, which I never thought they would say this, they go, we believe you should, or people should invest into crypto and digital assets. Now they shouldn't go to exchanges. They should go right through Wells Fargo and they should talk to them and or whatever division they're going to come into. So I just thought it was like, well, if Wells Fargo says it, and that's a bank in the game, it could be a pretty good parabolic move sooner than later.
Yeah, they seem to know, and they drew a lot of parallels as well with the historic price of gold during the 1970s as well to Bitcoin today. So a lot of things are pointing very, very bullish. Ben, did you pick anything from that at all, or did you hear about it?
I mean, I think that, I mean, with the question of do I think, Bitcoin can go exponential like that again, or yeah, I mean, that's sort of the general assumption with Bitcoin, is that it goes through periods of being sort of undervalued and overvalued. And when the market is fearful, Bitcoin can get undervalued for a while. And then when the market is no longer fearful, then it can get overvalued. But the path from going from, the path of going from undervalued to overvalued is often, some type of parabolic rally where it goes up quicker than most people imagine. It wasn't that long ago when Bitcoin went up 20x in 1 year, from 3,800 over to over 60, over 60K. So it's only a matter of time, I think, before we see another rally. I think the hard part for investors is just kind of seeing the light at the end of the tunnel and realizing that, you have to get to that point in time to see it. We don't know exactly when it's going to occur, but my general assumption is that it will occur at some point in the future. Just have to get through the current phase of the uncertainty in the markets that we're currently experiencing.
Yeah, one of the concerns, and the reason I spoke about these two last topics, is you have the cleverest money managers. They're both $10 trillion in assets. They're both now super bulls on Bitcoin. And we have all these retail investors that are go out buying Doge and Shiba and all this garbage. And part of what I would like to do is kind of try drive people away from the wrong path so they don't lose their shirts and own a little bit of a pristine asset. So would you guys believe it's fair to say, and it takes me to my next question, is what asset or assets do you have 100% conviction on? And what would you tell the audience? Should they buy Shiba Inu or Bitcoin?
Well, yeah, I don't know. I mean, it's hard to, I guess I wouldn't tell them to buy anything specifically.
Exactly.
But I would say I definitely have, most of my conviction is in Bitcoin, in crypto. And after that, Ethereum. Beyond that, the conviction falls off pretty quickly. That's not to say that I don't have allocations in other projects, and I do think other projects will do well. But when I think about, like, say, long-term conviction of, like, okay, what's an asset that I can just hold for the next 10 years and, I actually have high conviction thought. I mean, I think it will trend up with time. I would say Bitcoin. With a lot of other projects, you just simply don't know, especially beyond Ethereum. And I think Ethereum is a fairly safe play as well. But beyond that, look, we all have our favorite altcoin projects. We all do, and we talk about them. But they could also be irrelevant in 3 years or 5 years. Or if something better comes along, they could quickly become irrelevant. So I would say definitely the blue chips in crypto are Bitcoin, Ethereum. Those are my highest conviction plays. Everything beyond that is more of a speculative thing for a certain period of time, but I have to constantly reassess based on how that altcoin is doing against, like, its valuation against Bitcoin and its valuation against Ether.
Exactly. And just to double click into your Ethereum point, which I thought was very interesting. I covered yesterday this guy called Ryan Alice, who created a really cool discounted cash flow model for Ethereum. And, 2 to 3 years from now, fair value is $35,000. And I went through that model with a fine tooth comb and I couldn't find any flaws. So technically, if you valued Ethereum like you value a typical S&P 500 stock, trading at a PE of 35, that's your value. Do you believe in these crazy numbers? We have Raoul Pal, who said Ethereum late last year, live with me, said it would hit 40,000 by March of 2022. Obviously, it's not going to happen. But when you guys hear those $35,000, $40,000 ETH numbers, do you believe in them, or think they're just complete pie in the sky?
I mean, it could, but look how fast crypto moves right now. Can you imagine, like, James's James's big pick, Solana. Could you imagine that it would have gone from 25 cents to whatever it is now in just that short amount of time, just because of what it is? Can you imagine what happened with, I mean, all the different other ones that came up and just kind of just took over? I mean, if you take a look at the chart of 2017, the top 50, very few of them are still in the top 50. Yeah. It's a total rollover. And then I just think that things move so fast. And with this upgrade with E 2.0 being pushed back farther, and it's not even called E 2.0 anymore, being pushed back farther and farther and farther, I'm just not so as convinced as other ones can just take over. Do I think it can't do well? Of course it can do well. But would I put all my money into Ethereum? Absolutely not. And I would, to me, when I look at these things, I just look at one of the safest bets in the most volatile asset class would be Bitcoin.
I'm glad you didn't say land and Decentraland.
No, I mean, look, Facebook tried to make that big play. They changed their name to Meta, and they're slipping fast. They're ranked, I think, 9th in the S&P 500 right now. So it doesn't matter in that regard. But if I had to put anything on it, I mean, for crypto, it would be that. But I don't know. It's a tough stay right here. But the best thing, though, of course, is don't panic. And when you look at these markets and all the things that are going on Ukraine and the Fed and everything else, don't get scared and just like sell everything and go, I'm out. It's crazy because look at what just happened yesterday. So
yeah. And just for the audience, my two conviction bets are Tesla and Bitcoin. They're pretty much equivalent. Big bets on both because I like to diversify, not have all the eggs go all in on one particular asset, although I think Bitcoin is going to be very, very big in the future. Okay, 2022 started off rocky, continues to get rockier. Have you guys made any 2022 portfolio changes? Have you risked off in any way, moved to more cash, swapped some things out? Anything that you'd like to share with the audience?
Go ahead, Ben.
Sure. Yeah, I mean, I think one thing that, and I think we mentioned this a few weeks ago as well, is that I back in January, we talked about, this is not the time to be picking up 100 different altcoins, right? This is the time to be consolidating into the blue chips and or the projects you believe in long term, not what was shilled to you on Reddit last week. When things are going up quickly, you can sometimes buy a random ticker just because someone mentioned it, and sometimes it'll go up. But when the market's choppy like this, you really have to have that strong conviction to hold through some of these very volatile times. So I would say that the biggest changes to my portfolio have been that I've been focusing more on getting my Bitcoin percentage higher. And one way you can do that too is keep track of the valuation of your portfolio based in Bitcoin, not based in the US dollar. And if you start doing that and you're very altcoin heavy, when Bitcoin's below, like its 20-week SMA, 21-week EMA, what you'll notice is that your Bitcoin valuation is likely going to be going down if you're altcoin heavy, because those altcoins are bleeding against Bitcoin. And so I've been getting more Bitcoin heavy over the last couple of months. And another reason too, I think it makes sense to be Bitcoin heavy is I think that for a lot of altcoins to really do well again, and I don't mean just like 10, 20%, because they could do that in a day, right? If Bitcoin has a good day. But in order to really see those gains again, you're going to have to see a healthy Bitcoin first, right? So if Bitcoin's not healthy, I don't think we're going to see a healthy altcoin market. So that's why I think it makes sense to be heavy Bitcoin in preparation for either if Bitcoin goes up, I think it'll lead the market until it gets to a certain point, and then altcoins can rally. Or if it goes down, altcoins likely bleed worse against, altcoins likely bleed against Bitcoin. So I think being Bitcoin heavy makes sense. I also think having cash on hand makes sense because the markets are going to stay volatile like this for a while. I certainly several months, I think at least. So having some cash on hand to give your future self the ability to buy, future dips, I think also makes sense.
Good.
Yeah.
Rob, what about you?
Yeah. So, same consolidation is, for me, I pretty much consolidated a while back because, some of these things that I have were just like way, way outliers. You wouldn't even know what these cryptos were because like some were just like ridiculous plays, but it doesn't matter. So, but I still hold way more than 20 not way more, but more than 20 different cryptos. And for me, it's if I consolidate right now, everything's down. So they might come up, they might not. But for me, I'm just trying to just continue to dollar cost average, especially as things go down. And the easiest way for me to do that is just I set it up in Voyager. I buy X amount every single day, and I just let it ride. And then what I buy is Bitcoin, Ethereum, Chainlink, and Algorand. And those are like just every day. And then sometimes when it gets really choppy, I might increase it a little bit, just to increase the percentage, but then off I go. But I agree with Ben. I mean, people say cash is trash. Cash is great. Cash is great when you want to pick up some things that are like on a huge, monstrous discount. And right now, unfortunately, that's not real estate. But in crypto, you can find those deals.
Yeah, I'm in the biggest cash position I've been in since before C19. And I have to keep myself patient because everything is looking so cheap. Really good names at close prices. So let's do the final question, then we'll open up some questions from the audience. And a lot of people have been asking, especially I think because I knew Rob, you're coming on. What advice do you have for the first time buyer of real estate? There's a lot of people out there, they know they need to have their castle, they need to get a piece, take advantage of very low historic interest rates. But what advice would you give to somebody starting out buying their first piece of land or house?
Well, right now everything's pretty overpriced. Let's just be honest. So to get like a pretty good place, if you're good with your hands and you can pick up some rundown place, that's the way to go. Because right now, like in the major cities, like we purchased a couple of places in Houston, and we're actually have to sell one now because of a specific reason I won't get into. But we made like a quick 6 figures, and it's only been like 2 years. And I'm not bragging. I'm just telling you, like, that's the craziness that is the housing market right now. So if it was me, look for first of all, go to the banks, get pre-approved, check out to see if there's any kind of first-time home buyers type of programs for in those banks or in the area. Also, if you're a veteran, you get some pretty great deals. You don't have to put anything down as far as I remember. So take a look at those. And then if you're looking for, I got to tell you, if you're in a big city and it's like super overpriced, which I know they are, I would not be, and I had a bunch of cash on the side, I would be really thinking hard about it and maybe just going, you know what, maybe I want to just sign a 6-month lease if I'm young and don't have anything else going on, and 6-month lease, maybe up to a year, sit in a place for a while, wait for the price to drop. Because if not, I think you're going to be sitting on a house that's overpriced, and you're going to pay it, and it's going to go down pretty quickly.
Yeah, it's funny you say that because in San Francisco, you could buy a crummy 600-foot studio for about 1.2 million or maybe more.
Yeah.
But you go 30 miles across a bridge and you can buy 3 3-bedroom townhouses for maybe 4 for that same money. So it's very crazy. And my advice would be in terms of real estate is there's a couple of different rules that I like to. First of all is location, location, location. Always make sure you have a good location. Buy the crappiest house in the block. Sounds crazy, but do, because that'll inflate faster. Try get a corner lot if you can, because you get more land, and everybody wants to buy the corner lot, less windows looking in and stuff like that. And go as big as you can. So for example, now you can, if you have really good credit, you can put 10% down in some markets if you've got a good banking relationship, and you can borrow $1 million for about $2,000 a month with 10% down. So that is crazy with the interest rates we have right now, which aren't going to stay down forever. So there's some of the things that I see. Oh, right. So with that, let's open up to some cool questions. I know, see what the questions are going to be about today. Who knows what you're going to get. This is from MindFed. If ETH or Sol or another L1 will be the underpinning of most finance in 10 years, why wouldn't that coin be a store of value instead of Bitcoin? Interesting question. A lot of people talked about Ethereum being a store of value because of its utility in the network. What do you guys think?
I do. Go ahead, Ben, because it's what you always say about gold and Twitter. Go ahead.
Well, I think part of it is like, what do people mean when they say store of value? Like, do you want it to stay the same price and store the value, or do you want it to increase in value? And I think there's sort of like a disconnect there. Like, and that's one of the things we see on, and like Rob mentioned on Twitter with gold. There's a lot of gold investors that like it because it, theoretically it's a store of value. But the problem is it hasn't done anything in a decade. So while the price is the same that it was 10 years ago, it's not worth as much because of inflation. So, and then, when Bitcoin's in a downtrend, everyone sort of mocks the store of value narrative, right? Like if it's down 50% or something, people like to say, well, how can you call that a store of value? It is a store of value as long as you have the right time horizon. If your time horizon is 1 year, it's not the right store of value for you. If your time horizon is 5 years, I think it's a great store of value. So it's all sort of a matter of perspective. And I think that, with regards to Ethereum, I guess it just becomes some terminology, right? Like, because if you expect the stock market to trend higher, like if you expect Ethereum to trend higher, if you expect the stock market to trend higher, then everything sort of becomes a store of value, right? And that's one of the reasons why we invest, is because if we don't invest, what happens? Our purchasing power goes down, inflation eats away at the cash that we have. So we invest to stay ahead of that. So I would say that I do think Ethereum will trend up with time, like Bitcoin. And I think the definition of store of value applies as long as you have a right time horizon, and as long as your definition of store of value isn't that always has to monotonically increase. Like if you give it the ability to, or if you give it the flexibility to have occasional drops, then I think that makes sense. You can't really expect something to go up from $100 to $4,800, a 48x in a year, and not have some type of a pullback and long consolidation phase. So as long as you allow for that, I think you can give it sort of the same narrative.
Yeah.
Hey, James, have you ever followed Ben on Twitter? I'm sure you do, right?
Yes.
So when there's these, like, first of all, I own gold. So if there's any gold bugs, I own a little bit. I'm not like saying that, but Ben's perfect when he's when there's a certain gold bug on Twitter. He's I forgot his name. He's irrelevant.
Peter Schiff?
But yeah, I don't know. So like with him, like he'll always like tweet something, and then Ben will like consistently underneath say, "Oh yeah, well what's it been for 10 years? Oh yeah, what's it done for the last 24 hours? What's it been?" And it's just funny every time he puts it out there. I always laugh. I'm like, it's a good one. But I will say one thing to add to Ben's point about gold, and how it is like, or the store of value. Like I always think of things in terms of USA, because that's where I'm from. But if you're like in Venezuela, if you're in Turkey, if you're in El Salvador or wherever you're at, and your fiat just being inflated away, like it doesn't matter if Bitcoin goes down 20, 30% in a day. It's better than what you got with your fiat. And that really is a store of value. So like when the gold bugs talk about, it's not a store of value because gold and da-da-da. First of all, good luck doing that in developing countries, chugging around a bunch of gold coins before getting ripped off, as opposed to having Bitcoin just store those mnemonic phrases in your head. I think is the big disconnect when I see.
Yeah, exactly. And there's so much, like in these uncertain times, one of the most important things for Bitcoin is the inability to confiscate it. And I think people, with all these dark clouds hanging around, they're looking at that more and more as a lot of distrust in governments and risk of war and inflation and everything else, just rattling everybody. Next question is from Miko Man. He went 75% cash 7 days ago, not just because of the impending war with Russia, but he believes a recession in the US will happen. I know Bitcoin is maybe the answer, but what do you think? Do you think we have the chance of a recession hitting here? Like typically, historically, when you look at inverted yield curves, interest rates, that type of stuff, it always spells recession, with one exception over the last 70 years. What do you guys think?
Well, yeah. I mean, I just, when I look at these things that are going on around us, I mean, everything, the only thing I think that could save us from not going into a full-blown recession is if we go to war. Because it seems like when people go to war, all of a sudden you just fire up a bunch of either the tax hole services that are going on. And of course, you can tax people because they're more likely to pay a little bit higher tax and go, well, it's for the good of the country. And I will tell you this, there was a thing by Charlie Bileo, he put it out. The two bottom dwellers for inflation, CPI inflation, US and Russia. U.S. at 7.5%, Russia at 8.7%. I think Brazil's at 10%, something like that. So it just, when I see these things, I'm like, the people talking about recession, I'm like, well, yeah, I mean, at some point it's going to happen. It's not a if, it's a when.
Well, any views on recession, Ben?
Yeah, I mean, you're going to have them. I think it's really hard to predict them. I mean, March 2020, everyone was predicting another depression, and we didn't have it. Even September of 2021, people were, saying that the stock market was, going to drop significantly, or we were heading into a recession. And then we ended up putting a new all-time highs. So I think that, yeah, I mean, recessions will happen. It's just a natural part of the cycle that we go through. But I don't actually try to predict them, because I think that, if you constantly try to predict them, then you basically, and you invest according to those predictions, and you basically end up missing most of the run up, most of the run that a lot of these assets do before the recession actually hits. So yes, they'll occur. We're certainly going to have more of them in the future. I have no idea when they're going to be.
Exactly. For the last 13 years, 83 days of the last 13 years drove 90% of Bitcoin gains. As I say, if you weren't on the train for those 83 days, you didn't make it. You lost all the returns, basically. So you're dead right there. And people should always be, I believe, invested in the market. But, increase your cash position the more nervous you get, or the more toppy the markets get. Okay, Charles Kincannon, interesting question and a timely one. I thought DCA when there's blood in the streets. Is there blood in the streets now, or do we exclude macro events? Please clarify. Would you categorize this time right now as blood in the streets? I know you kicked it off, Ben, by saying, well, Bitcoin's higher than a week ago. How would you categorize blood in the streets, and when would you start DCAing into assets? To both of you.
Yeah, I mean, I think with Bitcoin, I'm still DCAing into it even at these prices. But I mean, we were at 33K 3 weeks ago.
Yep.
3 weeks ago. So certainly
January
there has
24th.
been blood in the streets. I mean, if something drops 50%, there's certainly some blood in the streets, I think, by a lot of definitions. I think in terms of DCAing a lot of other things, I kind of want to see the Fed actually do something, and actually see what's going to happen. Like there's just been all this talk for so long about what they're going to do, but they haven't done any of it yet. So I think that we're going to have a lot more clarity in a few months, once they actually start raising interest rates, and we see what's the market doing, how's it reacting, what's the Fed doing in response to maybe the way the market's reacting. Then I might get a little bit more aggressive. But right now, I still think it makes sense to not be super aggressive, and to still have some cash on hand.
Yeah, see, that's the problem the Fed have, is we are teetering on the brink of maybe a recession because of all the fundamental problems in the economy. If they increase interest rates too much, they increase the debt burden, which in turn slows down GDP, which spins the economy into a recession. So the guy, poor Jerome Powell, is really on a tightrope here. So, Rob, would you be DCAing in?
Yeah, and just to talk to your point, I just don't see them doing anything above three. I think 3 Fed raises, 3 points raises is the most they can possibly do. I don't see them doing anything beyond that, because like you said, and like I think we all know, it could actually lead to the market just going down. But as far as DCAing, I will tell you this. I bought every damn dip that there was out there just about over the last 18 months. And over time, there was a point I'm like, damn, all dipped out. I have no money. And that was essentially what happened. So now when there's these big dips, I'm like, is this it? Is this the lowest it can go? And I'll wait a little bit. Like the last one that we had, I think we did a show 2 weeks ago or something like that. And I said, I'm just going to wait. I didn't, this is like one of the first times I didn't buy the dip. I waited. It didn't go down again. It went up a little bit. I'm like, okay, now it's gone up a little bit. I might buy a little bit. And then it went up another 10%. I was like, great. Then it went down. But in all honesty, if I have the money, I'm going to keep DCAing, because I don't care what happens now. I'm just looking at what's going to happen in the next 3, 4, 5 years. And even that thing I was talking about with Wells Fargo, the same thing that Wells Fargo said, Cathie Wood said, which is they predict, was it a billion wallets? Yeah. 1 billion wallets in like 2025 or something like that. So if you see that with crypto, I mean, it's like game over.
Yeah, and Charles, to answer your question, from my point of view, all my big buys in my history of the last 30 plus years have been after big macro events. So never exclude macro events. One was a very big real estate purchase, literally right after 9/11, and stock market purchase and things like that. C19, financial crisis, they all happen with great regularity. Just be in a position with some good cash to take advantage. Next question is from Matt C. This could be a good one for you, Ben. Do you guys think we can stay in the same trading channel of 38 to 45K for another several weeks or months? Or will we get a clear move in one direction or the other? What do you see for Bitcoin?
Yeah, I mean, I don't really know about short-term stuff. We certainly could. We spent a few weeks here before we went down. I think we were at the 38 or 39 to 46K range, or maybe 44K range, for 2 or 3 weeks before we ended up dropping down below. So we could certainly spend some time here. I mean, if the stock market keeps dropping, then it's hard to imagine Bitcoin kind of just trading sideways throughout all of that. But I got to say, I mean, if you actually look at the Bitcoin valuation against, say, like the NASDAQ or against the S&P, it's actually been trending up, I think, over the last few weeks. So, yeah, I think we could spend some time in this range. And I know that people really want to see one direction or the other, right? We want to go up or go down. A lot of times you can just go sideways for months at a time. Look at summer of 2020, we were at 10K for 3 months straight. So yeah, there certainly is a possibility that we just sort of stay humdrum, but I would say it's more likely that we get some volatility either up or down. It's hard to imagine just staying at these prices for say 3 months in a row.
Yeah, excellent. We had a really cool question from Quick Call Computers, and it's kind of like the three-dimensional chess angle I touched on at the beginning. It said, Russia legalizing crypto as a currency. Do you think that's to avoid US dollar sanctions post-invasion? Brilliant. I think yes. I think there's a good chance of that happening. What do you guys reckon? Because Putin is a master strategist. Love him or hate him, he's a smart guy, and he can run circles around most other world leaders, is my opinion. What do you guys reckon?
Oh, I mean, yeah. I mean, just it's a good way to get rid of. I mean, just to sidestep sanctions. I think they've been wanting to get away from the world reserve currency, which is the U.S. dollar, for quite some time. There's a reason why he strengthened relations with the president of China, Xi Jinping, because he said, "Hey, if we have to play in this sandbox, which is the U.S. dollar forever, it's not going to go great for us like it hasn't over the last 40 years. So let's just go with crypto, digital assets, sidestep everything, make it a currency, and we can transact between ourselves. And maybe we can pull in Germany, and they can do some things with their power usage." Just a thought.
Yeah, that's a super interesting. So another really fun question. Morning, guys. This is from Cryptolicious. Because everyone says the metaverse is where the money is this year, where should we be looking to invest? And I know your opinion, Ben, on the metaverse. And Rob, you're more bullish. We are digging into all the top plays across all categories right now. We'll come out with something soon. But Ben, you first. Metaverse, is that, do you think, where the money's at in 2022?
I don't know. I mean, I think to a large extent, the metaverse, I mean, I think we are heading more digital in general, for sure. But sometimes I wonder if people, they have an idea and then everyone like FOMOs into that idea before that idea has really been built out. And so I still think it's relatively early, even though I certainly see us heading that direction eventually. I mean, look at Facebook, right? They changed their name to Meta. And I mean, the last quarter was their first quarter ever, right? Where they lost users. And we saw them drop, 25% in a day after hours a few weeks ago, after they had that pretty awful earnings report, and also pretty bleak outlook for 2022 as well. So yeah, I mean, in terms of I think one of the things I think about in terms of like where's the money going to go. I mean, we saw 2021 was layer ones. I was just all sorts of layer ones. If you were a layer one, it was hard. You'd be hard pressed to have not done well in 2021. Some of the places I keep going back to is I mean, we've talked about Chainlink before. We talked about DeFi in general, right? Like there's Aave, there's Chainlink, there's a lot of other plays that you could talk about with that. I still think that Link is undervalued, but I feel like I'm also growing old saying that as well. So I think really where the money is or where I want to be focused right now, as I said earlier, is in Bitcoin until Bitcoin is healthier. And once Bitcoin's healthier, then I could see myself allocating more to other crypto sectors. But I have a hard time allocating a lot to crypto sectors when Bitcoin isn't really looking like it's still below a lot of major areas of resistance. It's below where we'd like to see it, and it's been in a downtrend for 3 months, more or less. I mean, recently we've gone back up. So I generally think that most of crypto follows Bitcoin. So until Bitcoin gets healthy, I would assume that most crypto is going to kind of stay just behind Bitcoin. And then after that happens, I would be looking to expand back into more of the DeFi plays and probably layer ones. I feel like layer ones are going to continue to move up with time.
Yeah, that's a great point.
Yeah.
How about you?
I think, yeah, I mean, on that one, it was a great point. And just to add on to what Ben says, where the money's at is time. That's really what it really comes down to. I can't tell you what to invest into. Watch this video. I can't give any investment advice, but I can tell you that over time, picking, just not the greatest project, just a decent project, you'll do pretty well 3, 4, 5 years. It's just taking that time to sit back and going, okay, I'm not going to be a Dogecoin millionaire. It's going to take me a 3 to 5 year plan, just kind of stick around, dollar cost average, and be patient. I think that's the hardest thing. But then to answer the question about the metaverse play, man, I don't know about those plays. I mean, it could be big. Nobody trusts Facebook, so I don't think anybody wants to play in that in that place. But play to earn games, I think that could be potentially the next big thing. But you have to understand that if you think Bitcoin's volatile and Ethereum's volatile, take a look at those play to earn game tokens. Like I was talking about one called Gensokishi. It went from 30 cents to $1.50 in a week. And now it's back down to 89 cents. So if you want to keep playing that game, you better be very quick if you want to make any money or get in and get out. So that's the tricky one, and that's the tough.
Yeah, and I look at things now. I look at crypto and all the risk associated with crypto, and I look at crypto-related assets like Galaxy Digital. It's trading at a PE of 3. The price is $13. The average analyst expects it to go to 30. So in my little brain, I'm thinking, why would people risk something that isn't fully baked out, like you said, Ben, when you have sure things that have solid assets? Galaxy Digital has like 8 unicorns in its stable, like $1 billion plus valuation companies. So that's the way I kind of look at it. Last question is from Phoenix Zohar. Thanks for all your videos, gents. Appreciate the content from the three of you. I'd like James and Ben to play chess and have Rob announce the moves. Wouldn't that be fun? What would you say? And he said it's a blitz format. I used to play speed chess, but it's been a long time, and I'm a lot older now. So
E4.
I could definitely announce it. That'd be no problem.
We'll play in Rob's yard. Looks nice.
Trying to let my dog in. He doesn't want to go in. Yeah, all right.
That's a fun question. No, I appreciate all the questions, everybody. And the donations from LaTroll2 and Rambling Boy and St. Jude Needs Us at EJ and Kryptonite in My Pants and Kiwi Robin. You guys are all so kind. Any final thoughts from you guys? It looks like Bitcoin took a little pump. Not a lot to get excited about, but it did go up a couple $100 in the last few minutes. So it looks like it's done a little double bottom. I think there could be a lot more nervousness over the weekend. But sometimes the market runs a bit hot. But it looks like many equities are staying kind of down into the close. Any final thoughts from you guys? Would you be shopping this weekend?
I kind of want to see what the Fed's going to do on Monday, and I've been shopping plenty right over the last few months, so I kind of just want to see what is the Fed going to do on Monday, and also I wouldn't mind getting some type of clarification on what's exactly going on with Russia and Ukraine. So watching the Nasdaq close down 2.5%. This is kind of one of those times where I wish Bitcoin trading did close for the weekend. So we'll see what happens with Bitcoin over the weekend. Nasdaq closing down 3% or 2.5% isn't really that great of an omen. But I also don't think that I think it's impossible to predict short-term moves. So I would say, yeah, like I'm just gonna be patient, see what happens. Recognize that we are generally in a risk-off atmosphere, and keep some cash and continue to slowly buy into the market until we see better times. And then I'll try to figure out how to, the best, or at that point I'll take profits again and rinse and repeat the same thing over and over and over again.
Exactly.
Yeah.
Rob, for the weekend.
It's going to be automatic. Voyager's going to it's going to debit my account. It's going to buy the same thing, Bitcoin, Ethereum, Chainlink, and Algorand. And then if something really bad happens and it drops to like a ton, like 40%, I'll probably buy some. But unless it's just going to be the straight boring stuff I've been doing for the longest, that's it.
Yeah, I think we could have this big capitulation event as well. Combination of nasty result out of the Fed meeting and something bad happening in the Ukraine. If those two happen at the same time, we could have a nasty wick down. So that's exactly when you need your cash, everybody. And be prepared. If these two things happen at the same time, you'll see massive capitulation, cascading stop losses hitting. That's when you jump in. And that's when blood is on the streets. I think it was a question from Charles. So with that, everybody, I want to appreciate you guys. Thank you for being here. Thank you for everybody in the audience, and wish everybody a good weekend. But it's going to be one of those weekends where you should turn off your TV and go out into nature, get some vitamin D in the sunshine, like what Rob is doing every day. All right.
That's right. Try to get some sun.
Awesome. Right. Thanks, Ben. Thanks, Rob. Thanks, everybody out there. And thank you to the moderators. Yeah. Well, don't forget to subscribe if you haven't to Into the Cryptoverse and Digital Asset News. See you all.
Thank you.